see if things pick up. IT, I think, is the space perhaps to watch with all that has been happening. Rahul Singh is Chief Investment Officer, Equities at Tata Mutual Fund. He's our market master today. He's joining us right now. Rahul, good to have you with us here. Thank you very much for your time. So let's just start that question with the IT services, Rahul. We are seeing slow creeping moves higher. Is this going to last? I mean, globally, there is one view which is emerging is that it's not going to be as bad. Inflation is coming under control, but maybe that gets achieved without a sharp slowdown. That's good news for stocks, equities. Your views on IT services, Rahul?
Yeah, hi, good morning. I think there have been a few surprises in the results season where I think few segments, especially like Europe, has done better than expected. Also, some of the mid caps have managed to keep up the momentum on both the deal wins as well as the top line growth. So there's been definitely on a bottom up basis a few surprises. I wouldn't go as far and read too much into macro or take too much of a call into macro as to what's going to happen in US in terms of a deep recession or a shallow recession or a budget cut. But on the ground up basis, yes, the companies seem to be holding up better than what I think the markets were fearing. Of course, I think the real test will also be in the April to June period when we get more data and we get more clarity on how the budgets are panning out, IT budgets are panning out. So still some distance to cover before we can surely call that this sector is out of the woods. The other thing is that the growth definitely will be slower than last 2 years. So we have to keep that in mind, and valuations have adjusted downwards. So it's in a no man's land right now, I would say, and we need to now watch out for the future data points.
Okay, well, there is definitely a lot of excitement in the IT space this morning, and mid-cap IT is really the space to be. So let's just take a look at some of the stocks. Tata Elxsi comes out with numbers tomorrow, and after the strong showing from the likes of Persistent, Cyient, a couple of others, Tata Elxsi is surging now. KPIT Tech is also up over 1%. So the market is definitely separating the men from the boys in this space. And there is a big outperformance. L&T Tech is now up almost about 2% Happiest Minds as well. So, just one follow-up here, Rahul. If I know you mentioned that it's in sort of a no man's land, you'd want to see more evidence of a pickup here, but you can't time the market, right? As we all know. Do you think it still makes sense to put some money to work, even if there is a little bit of downside left? Don't you feel the worst could be over for at least the mid-cap IT stocks?
Of course, I think it's a large sector. It has great companies with strong balance sheets and, more importantly, capital returns. So, as a sector, it will never go out of favor, and there will always be a set of companies which would be doing well, even in a flattish market. I think next year, what we need to now focus on is which are the companies which can outperform the sector. So, instead of a rising tide lifting all boats kind of a market, which we have seen last 2 years. I think next 1 or 2 years is going to be more about which companies are executing better, which companies are at a point of time in the cycle or execution or strategy change where they can deliver growth which is faster than the industry. I think the focus will shift to that for alpha creation and not just the sectoral trend which we are discussing.
Hi Rahul, good morning. Rahul, the entire thesis was that India is going to grow. We're going to be in for a good infra boom. And in that kind of a backdrop, cement will do well. And that could be the case in terms of volumes. However, post the Ultratech call yesterday, they were not guiding for very high pricing going ahead. And the street is clearly disappointed on that because there was some kind of price increases that were baked, which could obviously come about. Do you think the street is reading this too negatively and ultimately the price increases will come about and those estimates will be met?
Well, I think cement goes through these cycles of expectations around price hikes, actual price hikes, and I think the analysts keep tracking price hikes with a with a lens every quarter, every month. But I think the point which we should step back and see is that obviously it's one of the cleaner plays on infrastructure or the capex cycle revival which we are seeing now. Secondly, I think the market itself, the cement market itself, over the next 2 to 3 years is going to get consolidated because of the entry of one large player. And I think those two things put together makes it a structural must-own kind of a sector. Of course, we have to keep taking constantly valuation calls and also relatively which companies are going to do better at what valuation and so on. But as a sector, I think the long-term fundamentals have only improved in the last 1 or 2 years.
Okay, all right. Long-term fundamentals have improved in the last 1 or 2 years. Well, Rahul, it was great speaking to you on the channel. Thanks a lot for joining in. Just one more question before we let you go, because we're sort of leading into the next interview. Now, we've talked about banks ad nauseum and how private sector banks are doing very well. But this outperformance that we've seen with public sector banks, right? And we have the management of Canara Bank next up. Do you think it's something that can sustain even in 2023? Or was this just an aberration? And from a long-term retail investor standpoint, does it make sense to add more here?
So I think instead of talking about PSU and private, what we have to see is that the banks with good liability franchise where the cost of funds don't go up. I think the major headwind for the sector obviously next year is what happens to their cost of deposit, cost of funds, and how do the NIMs kind of cope up with that? What is the extent of decline NIMs will have on a full year basis? So therefore, I think instead of talking about PSU versus private, I think we have to really look at the sustainability of these margins because the credit cost might come down further for a few banks, not for all banks from here. The credit growth is going to slow down from 17-18% to more like 14-15%. So you have leverages only in terms of OPEX as well as how much you can protect your cost of funds. And therefore, like I was mentioning for IT, it will become a little bit more selective. I think the stocks which will do well, the entire sector may not do well, but still I think majority of stocks should do better.
Put up RBL Bank if we can. It's I think now breaking. It's selling off a little bit. I think it's we put that chart up for RBL. It's broken through that trend line, but it's it's an intraday thing by a couple of bucks, but it's down 1.7, 1.8%. Is there more to go? I mean, if you go back and look at the previous 3 instances when RBL got to this trend line I was talking about, you saw meaningful, 20 to, in some cases, 50% rallies from this trend line. So we'll see if, history repeats or this time it's a failure and it kind of breaks through it on the downside. A few other names which we didn't highlight earlier. Birla Soft is up 2.6, so joins the IT services stocks which are doing very well. Nykaa, we were talking about this with Deepan earlier. Nykaa is up 2.5% after selling off quite a bit, 127. Zensar, of course, I already mentioned. There is Nureka, which is up 2.33% at about 467. It's done 30% in the last 2 days, and it's adding on gains. I don't know if there is any concentrated fund buying. It could be. Volumes yesterday were pretty large. Usually does not trade that much, but last 2 days has been very different. PTC is up about 2.25%. Stocks at about 115 or so. And Happiest Minds, there is slowly but surely more IT stocks, mid-cap, small IT stocks, etc., coming into the mix, which was not the case when we began. The Nifty is also looking a little better. It's up 60 points now. It was up about 40 earlier in trade. Gland Pharma, of course, is down 2%.